I'm going to quickly cut across to GMR, where the management of GMR is addressing the media.
As is our usual practice, we will start with a roundup of the financial highlights, which will be done by my colleague to my left, Mr. A. Subbarao, who's the group CFO. Thereafter, we will move to the I can call it the sunrise sector as far as the group is concerned, and that's the highways business, where Mr. Arun Sharma, the CEO, will field the questions as well as giving the highlights of the business. We will move to the energy business thereafter, where Mr. Rajkumar, the CEO for the business, would do the same, and then come to the glamorous part of our business, if I may say so, which is the airport sector. And Siddharth, who's the CFO for the airports business, would do the honors. So with that, over to you, Subbarao.
Yeah, thank you. Good morning. One happy tiding that we have to inform you is the receipt of the DIAL tariff order. The pain point, hence, the DIAL's financials would become history progressively, and we will have happy going forward. The financials for the year, hence, have been impacted very adversely by DIAL's financials. The DIAL has posted more than 1,000 crores loss, which has crept into the financials of the consolidated GMR Infra, which resulted in more than 600 crore loss for the year on consolidated basis. If you exclude DIAL and to Sabiha to some extent, then the results for the rest of the businesses are positive. The revenue has posted substantially high growth at more than 30%, both on the net as well as on the gross basis. EBITDA also would have been higher, but for the fact the DIAL tariff order has not been received, and also the energy business subdued performance in the last quarter because of the shortage of the gas. If you exclude these two factors, which are industry phenomena and which is a regulatory phenomena, the rest of the businesses are doing exceedingly well. So I would come back with your questions later. I will pass on to my other colleagues.
Yeah, the highway business for the GMR this year has been very good, and we have registered a profit PAT of 52 crore against a loss of 38 crore in the previous year. The toll segment particularly has been encouraging despite some of the adverse features of Telangana strike and sand lorries sand ban in the Tamil Nadu state. In the toll segment, we have done a revenue increase of about 11%, while PAT has gone up from minus 36% to 8%, which is a very encouraging sign. And the last year, we had, of course, won the Kishangarh-Udaipur Ahmedabad project, which is the largest project in the country in the highway sector. And I'm happy to inform that the financial closure for the project, which was due this month, has been achieved, and the agreements have been signed and submitted to NHAI. We expect the project to take off soon as the environment clearance is granted for the project.
Morning, everybody. As they say, when the going gets tough, the tough get going. So we have positioned ourselves quite well despite challenges that we have faced. We have had a couple of challenges. One was, of course, the steep decline in the availability of gas from KG Basin, which has affected our operations. To some extent, our operations in South Africa coal mine have also impacted us negatively, but we are working out solutions, and since this year our coal-based plant will come into operation, I think things will start looking up very, very positively. So we are looking forward to much brighter future.
Good morning, everybody. As far as the airport sector is concerned, Arun mentioned it's a glamorous sector. I don't know whether it's glamorous, but definitely it's one of the very closely watched sectors. The quarter 4 of financial year 11-12 was a good quarter for the airport vertical. The traffic in all 4 airports was about 15 million passengers, which witnessed a growth of about 9.3% over the same period last year. The gross revenue for the quarter at 1155 crores was 7% higher over the last year's same period. The gross revenues for the full year were over 4,400 crores, higher by 45%. The overall EBITDA for the quarter for the vertical was 217 crores against that of 205 crores same quarter last year. The flat EBITDA was mainly due to the impact of one-time non-recurring expenses of about 40 crores and also not accruing nacelle revenue of about 34 crores. But for these, EBITDA would have been higher at 291 crores, a growth of 42%. The vertical incurred a loss of 438 crores for the quarter against a loss of 174 crores last year for the same quarter. The full year loss was 1022 crores against a loss of 371 crores last year, mainly due to full year pre-tariff losses at Delhi Airport versus part year in the last financial year, and also hit on account of one-time costs of about 222 crores, and also not accruing nacelle revenues of about 66 crores. Removal of these exceptional items, the loss would have been lower at 734 crores. In terms of regulatory, the financial year, as Subara also mentioned, was 11-12 was full of challenges. Delhi Airport finally got its long-awaited approvals of project cost, approvals on ADF, and also finally the approval on the tariff, which came in April of 2012. This is effective from 15th of May 2012, and the full year impact will be witnessed in the current year. The regulatory approval on tariff, though below expectation, is a positive step towards clearing the regulatory uncertainty and also stemming the losses of the airport sector.